Neil, we just got the news about UniCredit nearing an agreement potentially with US authorities, a $900 million sanctions accord. Do any of the European banks look attractive to you at all right now?
Well, it's a good question, Vonnie, because European banks, if we look at the Bloomberg index on all of that, it's been flatlining for a while. It looks like a patient on life support, to be perfectly honest. And despite all the liquidity injections from the ECB, and maybe more to come with the TLTRO program, which I think one of your correspondents referred to as an all-you-can-eat bank funding vehicle, which I thought was quite appropriate. It's not really doing a great deal. Eurozone bank shares, I think, generally in aggregate, are about 70% off their peak, and so I've seen some commentators refer to that as a sort of a deflation bust indicator. So yeah, for sure, in terms of a number of valuation indicators, PEs, all the rest of it, it looks cheap, but it's cheap for a reason. And I think that we really need to see some progress on bank restructuring, bank recapitalization. There is admittedly some elements of that, especially in Germany, before we can safely say that that investors are going to come back into that market. So the outlook for Eurozone banks at the moment is still very uncertain.